What did you make of that decision over the weekend?
Well, I mean, it had a bit of a bearish undertone, but as always with OPEC, the devil's in the detail, right? So they didn't say they're going to increase production. They said they plan to increase it, assuming that the market can take it. And remember, OPEC has a much larger demand growth number than anybody else. They're expecting demand growth of 2.4 million barrels a day this year, which is about 2.5%. Everyone else is kind of half that rate. So we'll see how it plays out. I think if their number on the demand side is correct, and I was in Vienna last week, I had the opportunity to spend a fair amount of time with different members of the organization. If their number is right, they're going to be able to increase production. So I think the whole structure hinges on consumption being robust. And we're not quite seeing the same thing. We still think the summer is going to be good. We think inventories are going to draw, so the crude market is going to be supported. But certainly there is that element of potentially moving into an oversupplied market in 2025. So I think that's why the market sold off initially.
What underpins their call on demand? Where's that coming from? Did you get a flavour of that? What's the sense of that?
Well, I mean, I think what OPEC claims is that we are too focused on developed markets. We're focused on OECD economies in U.S., Europe, and they're saying all the demand growth is east of Suez. And it's Asia, Southeast Asia, as well as Africa and Middle East. And there's some truth to that. So I think we have to watch the data carefully, see how inventories play out. But I'm not nervous. We're looking for $80 Brent next year, and that's kind of our call. It's been our call for a while, and we are sticking to it for now.